Maybe I should call it developing news rather. The Reserve Bank deciding to keep interest rates on hold at 8.25%. But I think what might have caught most people by surprise is how close the decision was. 5 members of the Monetary Policy Committee, 2 wanted to increase rates by 25 basis points. Xolani and Mbanjwa, do the maths for us. I mean, this was almost a close thing. I think there would have been, real frustration for Reserve if rates had gone up again.
It would have been quite a huge surprise because it's been the MPC has been quite predictable. But 3 saying hold and 2 preferring an increase is very, very close. And it would have off-ramped to on the road that we're used to now, where we look at what is happening with the U.S. Federal Reserve as it happened last night. And as you've been saying to me this afternoon, a hawkish hold. It's as if the script was written by Jerome Powell himself in the U.S., because he did say the very same words that we will not hesitate at any time to increase and act in tightening monetary policy should the risks or more risks arise. So this means should there be another war, should there be another COVID outbreak, definitely we would see even more increases.
So, I mean, another war hopefully unlikely to happen, another COVID outbreak, please, unlikely to happen. What is happening, unfortunately, is petrol prices. Yes. And petrol prices, oil prices internationally, they use the word tightening. You and I use the word increasing dramatically. We've seen petrol prices as a result going up again, still lower than they were a year ago, I was reminded this morning. The point is that petrol prices, fuel prices generally, are having a huge impact on our inflation right now.
And we've already heard from the Automobile Association following this month's increase. In October, there will be another increase of petrol, R1.20. They're expecting R1.20 per litre, R2 for diesel, about R1.80 for illuminating paraffin. That's our biggest problem. That's our biggest challenge, because we are net importers of oil. So it's going to be a problem, particularly because we've been talking about this issue, this other issue here as well. The oil-producing countries, OPEC Plus included, all these major countries that produce oil are actually contemplating cuts, and we know what's going to happen.
Cuts in production, not price.
Cuts in production, I should say, thanks for that, and not in price, and that is going to send the price skyrocketing. And if and should it reach $100 per barrel, we are in serious trouble. And not only should we expect rates to be cut after 2025, it should be even further than that. So a lot now rides on the oil price, but there are also many other domestic factors that he spoke about. But the oil price is the big one. It's a huge input in terms of our inflation. And even if you look at core inflation, which takes out fuel and food prices, that is still elevated. And we heard from him, and we heard from State SA saying the same thing yesterday.
It was interesting because he also spoke about how, he says, there are other things that you could use to make sure that these cuts have an impact. And he's talking specifically about public sector wages. So Kasatu and Saftu, he's talking directly to you when he says these things. The point is that, I mean, it seems to me unlikely that that government workers would accept lower than inflation increases. There's huge contestation over this, but he's trying to speak to them.
Yes, he is. He's trying to speak to them and to his counterpart in Okotongwana at the National Treasury. And this is because he started first, when he was speaking about that, talking about prudent levels of public debt. And we know where we are ahead of the midterm budget policy statement on November 1st. We already know, we've heard from the finance minister saying that our debt to GDP ratio is actually bad. We might need to actually borrow more money, and we might actually tap the taxpayer on top of all that is happening in South Africa and in the economy. The taxpayer might be tapped on to actually fund and add revenue. On top of that, he spoke about that as well. Our SARS revenue is not as exciting as it has been over the years, but the most worrying thing is our debt levels, the public debt levels. And judging from what we have covered here many times over the past week, there is a storm coming when it comes to the midterm budget. There are cuts that the unions, that civil society are absolutely against. And he is speaking to the government to say, I'm holding the fort on this side when it comes to monetary policy. On the fiscal policy side, you haven't been holding your own. And he's talking to, yes, you're right, he's talking to the unions when he's asking for to keep real wage growth on average, something that is expected, no shocks. But his message is to the government, his counterparts in the fiscal policy side, to say, do your job on that side. When the unions come at you, try and, not give them everything they want. But there's very little that a government can do when it comes to unions. So there are a lot of things. It's not the first time he said these things. It's just that his tone has changed when it comes to directly speaking or indirectly speaking to the government. But it's always the same message to the government. You are not pulling your weight, and there are things that you can do in your own space that you are not doing.
The other big thing, of course, is food price inflation and how tough life has been for you when you're just trying to get through the month, trying to make sure you have enough food for yourselves and your family and for your children at the moment. And Xolani, this has been such a big issue. Food price inflation still very high, still much higher than CPI. And yes, we can go into the reasons as to why this is. El Nino is a concern, the Black Sea grain deal, the fact that the Russian President Vladimir Putin pulled out of that. He has his own reasons for doing that, of course. The point is that this is really the issue, is that until we get on top of food price inflation, we are going to have high inflation and we are going to have real suffering.
Yes, and the people who need those stable foods can't afford them. Food price inflation has come down to the elevated levels of just above 13%, now at 10.4%. But as he said that today, he also warned that there are risks that could come a little later. We could see them in the second quarter of 2024. It's something that is quite serious because, yes, inflation is overall is now at 4.8% within that midpoint range of 3 to 6%, but we know it's going to go up. And there were predictions yesterday that were made by various analysts. And today he confirms that inflation, they expect it to tick up in the next couple of months, but start decreasing in the second part of 2024. That does not mean that you and I are going to be paying less for our debt, for our credit, and for our financial commitments. But the food issue is a serious issue when you coupled with the fact that we, as a country, we still face service delivery protests, that people voice their anger and dissatisfaction through those means. And when it comes to food, you can live without water, running water, you can live without electricity, but not food.
Yeah. There's so many other aspects to it, and once again, the issue of load shedding coming up. And, he keeps making this point that if we have, increased supplies of electricity, if we have more sustainable supplies of electricity, he's talking really about the actual supply of energy. And, it's an amazing number I keep coming back to. It comes from Professor Mark Swilling, that since April last year, South Africans have spent 85 billion rand on solar rooftop PV. That's mostly homes, some businesses as well. At some point, all of that going to the system, keeping businesses going, keeping households going, which keeps demand up, all of that's got to have some impact somewhere.
Yes, some positive impact for those who are invested in renewable energy. We've seen that there's been admissions that actually the investments that have been made have propped up our economy. It has a small part to play, Stephen, in the forecast of GDP growth upwards from 0.3% from the Reserve Bank a couple of months ago, earlier this year, to now 1%. And for him to say no possibility of a recession. But there are still questions yes, a lot of money has been spent, but by whom? It's those with deep pockets, it's households with deep pockets, and even companies with deeper pockets. We know there are companies out there, smaller companies, that have closed shop. And it was very clear today, just like it's been clear many times, that there is a direct line when it comes to our economic performance, the inflation effects when it comes to load shedding and what's happening in the corridors of the South African Reserve Bank.
So many different things going on then, and obviously you made the point at the beginning of the sort of apparent coordination between the South African Reserve Bank and the Federal Reserve, and obviously these are two monetary policy committees, or equivalents thereof, that are faced with the same problem, and they've reacted in the same way, and they've done that because they actually have the same policy.
Yes.
So you know, you would expect there's like two judges ruling on the same law. They're going to come to the same, on the same facts, they're going to come to the same decision. It is also important, though, that banks around the world, central banks around the world, do react in a coordinated way to bring down inflation. And inflation has been such a big international story over the last 2 years.
And we've seen countries in Europe how when they did not follow our South African Reserve Bank line, what's happened in England, what's happened in Turkey. In Turkey, it's a different story altogether. The central bank was turned political by a president who wanted a second term, and the minute he got a second term, he went back to raise interest rates to unimaginable levels. But you are absolutely right. Those central banks who are ahead of the curve, just like the SARB has been, and you can criticize them and the governor and the MPC all you like, but the situation on inflation would have been much worse had they not, number one, early on at the beginning of COVID-19 in 2020, aggressively cut interest rates, because they knew that the public would need some sort of funds to keep them going, and then go and aggressively increase interest rates to deal with inflation. One thing that was said in an analysis report by HSBC is that they don't believe that the Reserve Bank has done enough to bring inflation down to the manageable levels at a fast pace that is going to be acceptable. But when you compare the inflation rate of South Africa to many countries on the continent and elsewhere in the world, we are much better off. Things could be much worse than they actually are.
Economic growth. You made the point, no recession is predicted, but still very, very slow, 1.1%. I mean, we're still looking at a situation where we're growing much at a far lesser rate than our population is growing. The point is, in real terms, we're going backwards. Keeps coming back to the same thing. We're used to the sort of Lesetja Khanyago lecture on this. We need structural reform to the economy. And yes, maybe something will come in the medium-term budget policy statement, although we've been told that before. We still don't have any sign of that reform.
Some parts of it. There have been some parts of it, just like what's happened with Eskom, and private companies have been given that leeway to generate their own power. We've seen it, but it has been in very small pockets, not the real structural reform that will really change the fabric of how economic activity is taking place right now. So when it comes to SA GDP forecast of 1% for 2023, it's way better than 0% compared to what the international observers have said before about South Africa. What is important about that economic growth, really it's become an old story that we could have 3%, we could have 4%, but we've seen jobless growth, which is another issue altogether. Growth, and whose growth is it? It's growth for some. They're making money, but without the creation of jobs and spreading that wealth, it is meaningless. It doesn't mean, I'm not saying that economic growth in itself is not a good thing. It is absolutely what we need. But in South Africa, our reality is that we've had for many years jobless growth, where we are not adding jobs into the market. Rather, every year as matriculants leave school, they join the unemployment line.
Xolani and Mbanjwa, thank you very much indeed for that. All right, so the Reserve Bank keeping interest rates on hold. That was expected, but the tone of it, very, very hawkish indeed. A lot to come.